Construction. Perhaps the next most common sight in Macau after the glitz and glam of its massive casino resorts. Macau Legend Development recently announced it's seeking nearly $700 million in financing to complete a new gaming and leisure complex on the city's historic waterfront. Not far away is the sprawling $2 billion Galaxy Casino. Beneath its gleaming towers, the baccarat tables are bustling with customers. Macau casino shares have defied the laws of gravity recently, dominating the Hong Kong Exchange's list of gainers in 2013. But how long will the good times roll on?
We still have a very bullish view on Macau gaming, and it's been one of our top picks for the last 5 years, and it's still one of our top picks for the next 2 years. We're most positive on the companies which have the biggest asset footprint, which means they're having the most land, having the most number of hotel rooms, and having the most number of gaming tables, and that really plays well into both Sands China and also Galaxy.
Analysts say Macau casinos are also well placed to capitalize on a seemingly unstoppable deluge of mainland Chinese tourists. The sector has seen a wave of upgrades. 20 of 24 analysts surveyed by Reuters recommended Macau's biggest casino company by market cap, Sands China, while competitor Galaxy Entertainment received similar approvals. But as casino companies gear up to report earnings, others are less optimistic. JP Morgan says casino stocks are already fairly valued and has advised investors to trim their holdings. Casinos will also start facing license expiries in 2020, which could see terms change, like an increase in the tax rate. The Chinese government's efforts to crack down on fund outflows and corruption also remains a concern.
If we look at the gaming revenues in Macau last year, it was about 19%. And without those anti-corruption measures, we would have seen the growth rate to be much higher than that, maybe 25–30%. There has been one positive impact coming out of it, though, which is that what we've seen is that some of the play has moved from the VIP segment to the mass market segment. So we've seen a slowdown in the VIP, but an acceleration in growth in the mass market. And this is actually positive for the sector because the margins or the profitability of the mass segment is 4 times higher than VIP.
This shift towards the mass market is touted as a game changer for the industry. And if low rollers can still mean high profits, the Monte Carlo of the Orient could see its second boom fueled by the average Joe. Serena Diaram, Hong Kong.